All right, good evening, everybody. It is Monday, November 28th, 2022. It is 8:52 p.m. Eastern Time here in New York. We are reporting live from 6th and a Half Avenue and 57th Street, right here on Billionaires Row. So this is going to be an action-packed week on Wall Street. If you remember from last night's live stream, the stock market outlook stream, there's going to be a lot going on, all the way from corporate earnings. We are going to hear from a Federal Reserve president every single day this week, which we're going to talk about that today as well. John Williams, the New York Fed president, spoke today at an interview by MarketWatch. Markets sold off, did not like what he was saying, so we'll talk about that. But we are also going to have a large land grab of corporate earnings with Salesforce and CrowdStrike, as well as Hewlett-Packard reporting their quarterly earnings this week. We are also going to be hearing from the S&P Case-Shiller Index as it relates to home prices. Then we are going to round off the week with the non-farm payrolls. So just so everybody knows and we are on the same page, the first Friday of the month is when we get the non-farm payroll numbers. And I think not only is the payrolls really going to be in frame of mind here, but most notably the unemployment rate, okay, which now stands at 3.7%. I think that is going to be a very, very closely watched metric based upon the events that took place today and what Fed President John Williams had to say. But today, the S&P 500 was down about 1.5% to 3,963. If we take a look at the DJI, the Dow Jones Industrial Average, we also sold off down about 1.5%. Let's quickly take a look at the NASDAQ 100 futures. We are down, or I think we're about flat, but we were down today on the NASDAQ. Now, I wanted to make everybody aware. If you pull up the ticker symbol for the S&P 500 on tradingview.com or wherever you look at your charts, you'll notice we are finding resistance and we are being turned away at that major key level, that 4,000, which corroborates with the 200-day moving average. Okay, so very, very critical levels here, guys. Also, we had a little bit of a bid in the dollar, as well as that 10-year U.S. Treasury yield came up. which means bond markets were coming under some pressure here, or some selling pressure. Let me close up the laptop. Tonight we are going to be walking down to the Moynihan train station, and I think we'll be walking down Central Park South to 5th Avenue and the Plaza Hotel. Let me close my laptop. I'll say hello to everybody in the chat, and we will get started. Oh, really quick, we will be talking about China. Okay, we are going to be talking about the HSI, or the Hang Seng Index. I think China markets, they just opened now, right? Maybe 15 minutes ago. So we're going to be talking about that. Very big stuff coming out of China, and maybe we will get into some contrarian views as it relates to China and other emerging markets. So bear with me 1 minute and we will get started. All right, team, here we are. Let's see who we have in the chat tonight. I see my friend Brian is here. Good to see you, Brian. Delia Kelly says, hey, Tom. Diego says, hello from Brazil. Brazil played today in the World Cup. I think they won. Good game. We have British Gray from Tampa, Florida. I see Jay, Sweet Country living in Michigan. NMB 045 from Canada. Always a pleasure. Hopefully your Monday is off to a good start. Emma Pretty is here, welcome. Arctic Trend says, yo. Pup says, hey, Tom. Paul Greenwell, Vinny Castellano, Dusty Cole, Dr. Longest, Gary Carpenter, Manny Ortega, welcome. And we have Steph UH. Kathy Lyons says, hey, Tom, how is everything? Mike, Sparks Carnival, welcome. Yeah, Sparks Carnival is saying my World Cup bracket is totally busted. Yeah, I mean, so tomorrow, speaking of the World Cup, at 2 o'clock Eastern, so 2 p.m. Eastern time here in New York, we're going to be watching, or hopefully you guys will be watching. I think many of you will be at work. I'll be at work. But the United States is playing Iran. I think it's going to be a really good game. Now, correct me if I'm wrong here, but I think this is a must-win game for the United States. So in order to advance to the knockout rounds, teams need to at least win one of the group games. And the United States, unfortunately, has tied both of their games. I think the first game was versus Wales, second knockout rounds, which should be pretty interesting and exciting to see. My good friend FredX is here. Hey, Marcy, what's up? Good to see you, Marcy. We are now standing outside of the beautiful Carnegie Hall. I think there is some sort of event. Now, Carnegie Hall is still all wrapped in scaffolding, unfortunately. But very beautiful building nonetheless. Joseph's, thank you so much. I appreciate you, Joseph. Hey, Jewel Mars says, greetings, Tom, from the Big Apple. Soho 11 Howard, holiday party. Fantastic, love that. Hopefully you're enjoying your holiday party with your coworkers. Very nice neighborhood over there, by the way. Pups says, Tom, how was your presentation? I hope you killed it. It was good. It was good. Things are progressing. Let's just say that. Things are progressing. Sales cycle is moving forward. Really quick, I just want to show you guys Carnegie Hall here. You sort of see the original pane glass trim. Now, Carnegie Hall is one of my favorite buildings here in Manhattan. Obviously, it's a big shame that we have all of this scaffolding up here, but hopefully it will be removed sooner rather than later. Let's just say that. John is here, welcome. Bree Graham says, I work from home Tuesdays, so I'll be able to watch. You know, they've been having some pretty good coverage on Twitter lately. You know what? Speaking of Twitter, a little bit off topic, but I think this is actually appropriate to talk about. Is anybody following? Now, again, I think this is all allegedly at this point. I'm not sure if this is confirmed. But supposedly, Apple is threatening to remove Twitter from the App Store. Now, I believe Elon Musk tweeted about this today. and supposedly they were given no warning and no reason as to why Twitter may be removed from the App Store. But that's a big issue. Anybody else hear that? That's a big issue for Twitter if that actually comes to fruition, by the way. Aspilian Iota, welcome. Good evening. Sally is here. It's getting cold out too. I'm shivering. Matt M, good to see you. Sparks Carnival says, I read that also. Elon does not like the 30% Apple Play tax. Hold on, let's cross here. Yeah, so I saw that too. And you know, there was a really funny meme, because you know how Elon Musk has been trolling everybody almost nonstop about you got to pay $8 for the Twitter, for the the blue check mark. Well, somebody photoshopped a tweet by Tim Cook, obviously the CEO of Apple, on Elon Musk's tweet complaining about the potential delisting from the App Store. And Tim Cook says, you'll be reinstated if you pay us the 30%. So I thought that was kind of funny. Hey, Chad is here. Says Apple is not a righteous company. Monsters has heard about that. Kind of wild, no explanation. D is here. Says contacts make contracts. Millionaire sales guy told me that when I was just starting my sales business. That little nugget changed my entire approach and sales life. Wow, D, that's actually a really good saying there. Contacts make contracts. I think I would have to agree. Very good there. I want says Twitter still works well through a browser. Yeah, I mean, I'm very, very bullish. I like Twitter a lot. As I've said before on the stream, I think Twitter is the one sort of pure play social media platform that the users get more value out than they give. You know what I mean? So Facebook, a lot of it that I've seen is sort of like a time suck for their users. But on Twitter, if you use it appropriately, right, you hang around the right crowds like FinTwit, Financial Twitter, there's actually a lot of interesting things to be learned and connections to be made on Twitter. So I actually really like the platform. Hey, Fabio is here. So hello everybody. Hey Tom, how is the Chinese food? Saw it on Twitter, great live stream. Yeah, so that is a very, very good Chinese restaurant. I'll quickly give you guys the recommendation there as we stand outside the Brooklyn Diner. It's called Dim Sum Sam, and it is on the south side of Madison Square Park, so 23rd Street. Very, very good. Very, very good. Hey, Vivian is here. Says hello, everybody. Good to see you, Vivian. We are standing right under the beautiful Central Park Tower, right here at 217 West 57th Street. I'll give you guys some perspective of just how massive this building is. But one of the things I wanted to talk about really, really quick today, and if you remember from last night's live stream, the stock market, a look ahead stream, this week is going to be very important due to the fact that every single day this week, we are going to hear from a Fed president. That's right, every single day this week, we are going to hear from a Fed president, starting with today. So hopefully many of you had the chance to tune in to marketwatch.com today at 12 noon. And there was an interview with the New York Fed president. The New York Fed president spoke at the New York Economic Club today, John Williams. And I was listening to some of the things that he was saying. And I think it's no wonder why the markets had a very, very poor reaction. Because if we sort of bring this all together, the markets were getting very, very giddy and rallying off the back of a better than expected CPI report, right? So economists were expecting the CPI to come in below, or the actual CPI number came in below economists' expectations, but CPI and inflation still increased on a year-over-year and month-over-month basis. So if we think about what Fed President John Williams says, he does say, so looking on the bright side for all of those people that are expecting a Fed pivot, he is expecting, or he is starting to see, inflation come down. However, he says there is much, much more work to be done in order to bring inflation back down to that 2% target. Now, here's two things that I think were very critical as to why, right? And these are the things that we've been very basic, we've been talking about on the streams for quite some time now. Now, John Williams, he sees demand for labor and services still well exceeding supply, resulting in broad-based inflation. And we've been talking about this as it relates to the housing market and the construction sector in general. We've been talking about how there is still a shortage of skilled labor. And one of the things that is really, really impacting inflation here is wage pressures. So the labor market is still relatively tight, even though we are starting to see broad-based layoffs at a lot of these tech companies. It doesn't seem to be enough to really bring that unemployment rate up. Companies, especially small businesses, are still looking for skilled labor. And when there is a shortage of skilled labor, that means the supply and demand is out of balance. And that means, well, good for workers, good for me and you, right? We get paid more, but that's not what the Federal Reserve wants to see. So that was a big excerpt from the speech. He does see inflation overall generally coming down, but where it's being more ingrained within the economy is labor and services, okay? So labor costs are going up. Now, I think generally speaking, I think both sides of the aisle would agree that more than 50% of this inflationary mess was caused by supply chain disruptions, right? So essentially what we had during COVID is the government forced everybody to stay home. We couldn't physically produce anything, but at the same time, the government started to give out money to the public, right? We first started off with the Trump bucks, and then we had the Biden bucks. So if you increase the money supply and you distribute money to everybody, but there's no production to meet the demand, prices go up, right? So we had everybody staying home. They were distributed money, they were shopping online, they were buying goods and services, but not only was there no one to produce these goods and services, we had a massive, massive supply chain backlog. And now we are just starting to see those supply chains heal a little bit, which should sort of bring back into balance supply and demand in that respect. So those were the main two things that I think we really need to be paying attention to. Hey, Rich Child 9 says Fed is not worried about inflation. It's the middle class that feels the pinch. Very loud here on 8th Avenue, right at going up to Columbus Circle. Millie Vanilli says way too much PPP was pumped in. The working class that didn't grab PPP will pay for this in a long time coming. I think it's very true. Mary Lambs is wondering if you think the China protests and or Iran versus USA clash will have any effects on the markets. Yeah, so Mary, we're going to talk about that actually today. Now, if you remember last night, while we were doing the live stream, the Chinese markets opened. So if you look at the Hang Seng Index, ticker symbol HSI, we were down about 5%. But notice how we've rallied all the way from the lows. And if you look at my Twitter page, or even if you just go to tradingview.com yourself, you'll notice we found support on that 50-day moving average. And even though the HSI, or the Hang Seng Index, closed down 2% yesterday, it closed at the dead high of the day. So we're going to talk about that a little bit later, but that is very, very critical to watch. Mike sees his supply chain heals just in time for China unrest to ruin the supply chain again. I shouldn't be laughing at that, but it may be true. It may be true, I'll say that. Now, the other thing that I wanted to say that was very telling at John Williams' speech here in New York. Sorry if my voice is quivering. I'm not used to the freezing cold. It was 55 degrees last night when we were doing the stream. It feels like it's 20. But markets really sold off and reacted poorly when John Williams said he sees interest rates being held higher for longer well into 2024, right? So for all of these people who are calling for a quote-unquote pivot, I think you're going to see rates elevated for longer, even though, really quick, this is a good view of Central Park Tower here, one of the newest additions to Billionaires Row. Even though they may slow the pace of rate hikes, right? So if we look at the futures market, they're pricing in an 80% probability of a 50 basis point rate hike. In my view, it's not necessarily the rate at which the Fed is hiking. It's, to me, what I'm worried about is the duration. And assuming we go back to a more normalized interest rate policy, right? You have to keep in mind, we are coming off almost 14 years of ZIRP, pretty much zero interest rate policy. So if the Fed, assuming we get to a 5% Fed funds, just imagine if we keep those rates there for maybe 1 or 2 years. I think that is going to put a lot of stress and strain on some particular companies. And we'll talk more about that later. Hey, Teresa Diaz, thank you so much for the $2 donation. I much appreciate it. It says, thank you, new subscribers, 25,200. Whoa, that's insane. I really appreciate everybody subscribing and joining the channel. Hey, the XRSTL says, Tom, I saw an article about how the decline in birth rate could affect the shortage in the job market. Any opinions on that? I think that is a very good point, and I would like to point to Japan. Now, one of the reasons, so when a lot of times on this channel, we'll talk about monetary policy as it relates here in the United States, right? And that's because the United States is the largest economy. It is the driver. So we always talk about the Federal Reserve, but think about the Bank of Japan, right? There's global central banks. There's central banks all over the world. And it seems as if you want to sort of spot an anomaly in the marketplace on a global macro level, it's the Bank of Japan, right? While global central banks, including the ECB, the Bank of England, and pretty much every other central bank around the world is entering quantitative tightening and raising interest rates, the Bank of Japan is still easing. They are still keeping interest rates actually negative and still printing money. And there's been some speculation as to why they've had to do that, and that is due to population decline and birth decline. It's a very, very good observation. Sparks Carnival says the Bank of Japan must have Mario hitting his head against those floating coin boxes nonstop. I know. That's hilarious. So really quick, this is 9th Avenue, but I think it's going to get too windy. I'm already feeling the wind start to pick up, so we're actually going to head back into the island. But it's sort of nice to show you guys over here, because we usually tend to stay centered in Midtown Manhattan. So this is headed towards the Hudson River. But this area has changed so much over the past 10 years. William Brooklyn is here, checking in from Brooklyn. I hope everybody is well tonight. Good to see you, William Brooklyn. Hope your week is off to a fantastic start. You could see 220 Central Park South here with the beautiful gold top. Now, a lot of the times on the stream and over the course of the next 2 weeks, we are going to be talking about what I like to call the second part of the bond market. So you guys know I always say that the stock market is all but a mere derivative of the credit or the debt markets or the bond markets, right? So the stock market will derive its value from the bond market. However, we've only really been talking about the treasury market as it relates to the bond market. Now, the treasury market, you guys are probably experts in this by now because we've been talking about it so much, but in broad-based terms, it is a way for the US government to issue bonds in order to raise money to finance government spending, right? So think about the mechanics of how the bond market works in the treasury market. And then as we progress, right, because we always like to look for leading indicators to try to predict GDP growth, which in turn will help us give a better idea of how corporate earnings will grow. And then lastly, the direction of the S&P 500 and major equity indices. Love the dog. Love the dog, it's beautiful. I think that's one of those Shiba Inu dogs. So just as we talk about the treasury bond market, right, and how the 10-year US Treasury yield is the benchmark for which pretty much all other fixed income assets are priced, it's the same in the corporate debt market. And a lot of the times we can look at just how we look at the yield curve and we do yield curve analysis as a leading indicator for how the economy may play out. We can also do the same thing by looking at corporate debt. But we won't do that tonight. I just wanted to give you guys a little bit of a precursor there, but it's very important and we could tell a lot by the health of the corporate debt market. And in general terms, you have two segments of corporate debt, which is investment grade and non-investment grade, or you could call that junk. And these bonds are priced via spreads over the benchmark, which is the 10-year US Treasury yield. Now, to keep it in very simple terms, as we come up on 8th Avenue here, if you have a AAA rated bond, you're probably going to have a very, very narrow spread over the benchmark, right? But if you have non-investment grade debt or junk bonds, the spread over the 10-year is probably going to be extremely, extremely wide. And oftentimes, if you look at these major bond indices, whenever we have a major stock market sell-off, you'll also have these corporate bond yields blow out. And you can use that as sort of a leading indicator to try to predict GDP growth and thus corporate earnings and then the trajectory of the stock market. But we may cover that on a different stream because there's a lot to cover with that. Hey, Chris Beeman is here. What's up, Chris? Chris is joining us from the sunny and beautiful Arizona. I wish it was warm here in New York. It is freezing. Yeah, Michael Joseph says half of them will probably default. That's a reason why I really wanted to progress on talking about the corporate bond market, because you're starting to see some of these yields blow out here, which is interesting. Hey, Dee is here. Sally, welcome. Pup, my presentation went very well today. I thank you for asking. Mike says my in-laws derive a lot of income from their junk bond funds. Makes me really worried for them. Yeah, I mean, the thing is, you know, and this is always why I say I always say that the average retail investor or retail trader always tends to put the cart before the horse. And what I mean by that is very seldom, right? Very, very seldom does the average retail guy or girl or investor have a fundamental understanding of how money is priced, right? If you want to sort of get into the finance business, it is literally the business of money. And we've always said, reverting back to that very famous Bill Ackman interview, that investing is all about determining the future value of company cash flows, right? And that is why oftentimes, let's say if you have experience working at an investment bank or a hedge fund, or maybe if you're just running your own money, chances are you are very familiar with a discounted cash flow formula or model that you would build in Excel. And that is very, very dependent on rates. And this is we'll just wait for the bikers to go by. This is a very interesting period in time when we are having a seismic shift in rates across the entire spectrum. So just like junk bonds, many people may be attracted to them for their extremely, extremely high yield. But the reason why they have extremely high yields is because a lot of the credit rating agencies, right, like Moody's, are probably assigning them a huge, huge default risk. So as the default risk increases, investors are going to demand higher yield for the risk because they may not get paid back, right? At maturity, there's a very high probability that there may be a major default. And that is also why when we talk about how corporate bonds are priced, it is always priced via a spread on the 10-year US Treasury because, and I want to be very careful when I say this, risk-free rate of return. US Treasuries, we've never defaulted on our debt here in the United States, right? I'm not saying that we can't, but it's generally risk-free. So corporations, obviously, they can go bankrupt. They can go out of business. They maybe not pay you back. So there's a lot we can take from the bond market to forecast GDP, corporate earnings. But it's a good point. Good point, Mike. Yeah, Vivian's is kind of bond or debt investment that is rated below investment grade. Teresa Diaz, good to see you. Thank you, Teresa, for being here. Hey, NPC 007 says solid state battery stocks are very, very hot. So Pub says drink every time. Tom says seldom. Do you guys want to know why I've gotten in the habit of saying that? Do you want to know why? I'll quickly tell you why. I won't bore you with the details. Really quick, if you look all the way down there, that is Times Square. And the very, very top of this is, you can see the blue sliver right there. It's actually Barclays Investment Bank. He actually used to be Lehman Brothers. We all know what happened there. But early on in my sales career, very, very early on, I would always read these Brian Tracy books. Is anybody familiar with Brian Tracy? So when I was a teenager, just starting off my sales career, I would read all these books. I didn't really know anything about business or anything. And he would always use that word like repeatedly. So maybe it's just sort of like a memorization. Anyway. Hey, Audra Henderson is here. Says, hey, Tom, good to see you. Welcome. Brendan O'Brien says, 1 year T-bill at 4.7 should be a safe limited duration. And if recession goes likely up. Yeah, so we're pretty much inverted all the way across the curve, right? Edward Adams says, can we go to the Park Avenue Tower tonight, 4:32? Yeah, I think we're going to head there. I think we're going to go all the way to Park Avenue. We haven't been there in a while. I know. So, yeah, Michael Joseph says, loves Brian Tracy. I have so many of his books on, like, negotiation, how to talk to people. Anyway. Slime of the Decade says, Tom, have you been to the Russian tea room? I have not, but it's absolutely beautiful in there, what I hear. Now, there's no photography allowed in there, but from what I've heard from a lot of members in the chat, it's really, really nice in there. It's probably expensive, though. It's right here on Billionaires Row. It's probably, you're probably going to pay a premium for that, honestly. Dusty Cole, good to see you. Welcome. Before we head over to Park Avenue, I want to show you guys this building right here. And this is the Steinway building. Look at how unique it is. Some call it the Stairway to Heaven building. Right next to 157. Gary says the stream keeps on buffering. Is the stream really buffering? Hold on, let me check my Wi-Fi. Sometimes I have my Wi-Fi on. Yeah, Marcy says, didn't know you couldn't take pictures in there. Yeah, you can't. There's actually a sign on the door there. But anyway, I would very highly advise you look into this speech that New York Fed President John Williams gave today. Now, he also said that he expects core goods prices to come down. Obviously, again, that is due to slowing global demand and improving supply chains, which we just reviewed. He also says he expects the unemployment rate to rise between 4.5 to 5% by the end of next year. That is his target. And this is also another reason why I think the markets had a very unfavorable reaction, because think about where we are right now. Right now in the United States, we have a 3.7% unemployment rate. And if John Williams is forecasting to the market that, hinting to the market that their target for unemployment is going to be 5%, well, you don't need to be a rocket scientist to sort of figure out what he means. Their goal is to throw some more people out of work, right? For lack of a better way to say it. And also, the way I interpret that is there will be no material pivot or pause in interest rate hikes until that threshold is met. All right. And if you remember, 2 months ago, we actually had a little bit of a bump or a drop, I should say, in the unemployment rate. And then we went back up to that 3.7% mark. And we are going to find this out on Friday. Okay, so the first Friday of every single month is when we get the non-farm payroll numbers, and we will also get the unemployment numbers. So assuming the unemployment rate stays locked at 3.7%, as many economists are forecasting, well, I mean, we could have a long bumpy ride until we start cutting rates. So, hey, Bagels and Walks says, hey, Tom and NYC pals. Bagels and Walks, happy Monday and God bless you. Hopefully you had a fantastic holiday weekend. Matt M says, Tom, Disney hiring freeze remains in place. Announcement today. So is that across the corporate sector or at the parks as well? Max M says, what's up with all the garbage on the streets? Yeah, it is a big problem here in New York, but we really don't have any alleyways to put all the trash bags. And to be fair, I think Monday is the garbage night for sanitation. Jonathan Francis, hello, Tom and chat. Good to see you, Jonathan. You guys could quickly see all the candy canes across the street there. Grand Street 1 says high inflation and unemployment rising. It should be an interesting summer in the streets of the city. Indeed it should. Seism or Sealsm says, hey Tom, what do you think of the China protests? All right, so let's talk about China really quick. We'll talk about China. I was going to talk about it a little bit later, but I think it's front of mind, right? Now, I think we should think of this in two very specific ways, because if anybody remembers from last night's live stream, one of the critiques, or I should say self-critiques of myself, is sometimes I could catch myself, right, as an investor, whatever you want to call it, trader, falling into confirmation biases. And I think it's very important to have a very open mind during times like this. And I want to give credit to a an amazing post I saw today on Twitter by Thomas Hayes. Now, he is an equity research analyst, and he made some pretty interesting distinctions. And before I say this, look, I understand there's very, very big differences. I understand that the political environment is very different now, but I think we always have to revert back to what one of the greatest investors of all time, Ray Dalio, says. And Ray Dalio says, generally, that the best students of history tend to be the best investors, right? Because history tends to not repeat itself exactly, but it often does rhyme. So if you go to my Twitter page, if you follow @WalksWallStreet, take a look at the last thing that I retweeted if you sort of want to follow along with this conversation as it relates to China. Now, in China, there is massive protests, obviously because of the horrible working conditions as well as the zero COVID policy, really triggering off a big protest at Foxconn, which is one of the largest manufacturers for Apple. And last night, I think the HSI, which is the Hang Seng Index, was down about 5%, but we rallied all the way throughout the day in the China session, and we closed at the dead high of the range. Now, we still closed down about 1.5%, but notice where we rallied from, okay? We rallied off of the 50-day moving average. And these protests, although they may not be the same as the Tiananmen Square protests, well, maybe they could escalate into something similar. So I think it's appropriate we quickly touch on the history and the market sentiment and the market action as it relates to the Chinese equity markets around the 1989 Tiananmen Square protests and massacre. Okay? And we're going to talk about that as we come up to West 56th Street here, standing right outside of the Trump Tower. I'll give you guys a shot of the sort of like a fire truck here. Now, the 1989 Tiananmen Square protests and massacre ran from April 15th, 1989 to June 4th, 1989. Okay, and we all know how horrible that was. We won't go into the cause, we won't go into what happened, because I want to sort of keep this on track as it relates to the financial markets. So you would think that after these massive protests and during all of this distress, the Chinese equity markets would have performed rather unfavorably. And if you would have guessed that, you would actually be wrong, okay? So over the next 4 years, the Hang Seng Index, and you guys could look at this for yourself, I would actually strongly advise you do so. If you go to tradingview.com, it's very loud tonight in New York City. Everybody's banging on the horn. If you go to tradingview.com, type in ticker symbol HSI, zoom out to a monthly time frame, and look up or just do a Google search, or I'll give you once again the dates of the Tiananmen Square protests. Started April 15th, 1989, lasted till June 4th, 1989. And over the next 4 years, the Hang Seng Index went on to rally almost 400%. To be exact, it rallied 378%. And again, I really want to quickly give a shout out to this equity research analyst, Thomas Hayes, for sort of drawing these potential similarities here. Now, again, I would like to say, I'm not saying it's going to play out exactly like that, but I think we need to keep an open mind because bull markets tend to start on extreme pessimism. And I think we need to be open to all different areas or outcomes. Dan Zhang says, Tom, I actually don't think those two events are related. Hong Kong wasn't given back to China until 1997. Right, I totally understand, and I get that. The point I'm trying to make as it relates to the financial markets, it doesn't necessarily mean these two events need to be related. Think about it from a sentiment point of view, right? Usually when you think the world is going to end, horrible things are breaking out, people are dying, that is when markets bottom, right? It is not when, the government is printing a bunch of money and people are buying GameStop and they think they're getting rich. That is when markets die on euphoria. But it's a good point. NPC 007, good to see you, my friend. Welcome. X says, what do you think about the ability of the United States being able to pay the national debt being tied with the federal budget? I really don't think, in my opinion, that we intend to pay it back. I really don't think it's intended to pay it back. I think what we intend to do is just manage it over time and just make the interest payments, because it's not, just being honest, it's not realistic to pay it back, in my view. And again, that's just my opinion. I don't know, what do you think? What do you think? Wow, Dan Zhang says, my friend actually went to the protests place in Shanghai. The police cleaned the scene right after it happened. Wow. Sparks Carnival says Hong Kong stock market is up 3%.
Steve, are you proposing?
All right, team, we are going to be walking up Fifth Avenue, but we are actually going to make a left here because I want to show you guys the Jeffries building. I wanted to quickly read you guys a very, very famous quote, right? And what I try to do on the stream is I try not to feed you my own narrative. I try to give you both sides, right? So I think you guys know my take on Chinese equities, but we've been I've been catching myself being maybe too bearish on it. And during times like this, that's actually where we could potentially see the most opportunity. So there's a famous saying on Wall Street, and it goes like this. It's that bull markets are born on pessimism, they grow on skepticism, and they die on euphoria, okay? So if you think about all of the horrible, just sheer fear, like, oh my God, fear, okay? Think back to when COVID just hit, okay? Many people thought that the world was literally gonna grind to a halt and end, right? The stock market sold off not as deep as the 2008 financial crisis, right? But it was the duration in which it got there. It got there in 2 weeks, right? 30% declines across the board in 2 weeks, scared the living you-know-what out of people. And all the way up, this stock market climbed the wall of worry. And very, very many people were underexposed to equities leading into the first half of 2021. But if you noticed, when the market really started rocking here, oh, look at this. This is a really interesting place. And this is actually right in the Jeffries building, by the way. Very unique building. gets very, very slim all the way up at the top. I think they did a good job decorating here. But if you notice, as the bull market started to progress, I think the number one word that could be bang on accurate for describing all of this is euphoria. I mean, just the sheer euphoria of all the nonsense, the GameStop stuff, the memes. It was just like such a mockery. And during that time, I actually sort of gauged the sentiment in the chat. I mean, I couldn't walk 2 blocks without somebody putting in a different ticker symbol in the chat saying, look at GameStop, this, that, this. And it's just like nonsense. And now you never see that stuff in the chat, right? So I think it's very, very important as portfolio managers to be cognizant of the overall sentiment as well as the global macro picture. Hey, M Royal, thank you so much for the $5 donation. That is very kind. It says, Tom, I know it's quote unquote old news, but what would have happened if the 2008 recession was allowed to fail? Where would we be today if the failure was allowed? That's a really, really good question. Now, if the failure was allowed to happen, which I actually think should have occurred, right? Now, many of you may disagree with that, but the reason why I think we should have let these big banks fail is because if you don't, you set the precedent of what's called a moral hazard. Right? So does anybody remember after the 2008 financial crisis, the term moral hazard being thrown around? And the reason for that is because if you could speculate without any sort of ramification, and if your speculations go unchecked and you have no sort of, you can never go bankrupt, you can never lose your job, you'll never lose money, well then, what is the free market teaching you, right? If anything, that's called corporate socialism. You're socializing the losses. But in my view, to answer your question, and again, this is very opinionated to me. I'm not saying I'm right, not saying I'm wrong. But if the banks were allowed to fail, you would have probably had about a 5 to 6 year, very, very harsh, brutal, almost unlivable economic environment. But I think we would have grown a much stronger and built back a much, much stronger and sustainable economy out of the financial crisis. Instead, what we did, and again, this is very opinionated in my view, instead what we did is we had the Federal Reserve cut rates to near zero, and created a very, very specific environment, oftentimes what I like to call the creation of a 2-tier society, because there's really 2 drivers of markets in my view, right? Obviously, number 1, corporate earnings, everybody understands that. But number 2 is liquidity, right? Liquidity is a driver of markets. And when you have liquidity being sucked out of the system, that's when you get extreme volatility and stock market declines and the like. So instead of letting traditional capitalism play out, letting things go bankrupt, we have transitioned into what I like to call a monetary experiment, where we've ballooned the Fed balance sheet, which means, a lot of the times when we talk about monetary policy, we talk about the Federal Reserve setting interest rates, right? But they also have a balance sheet, in which case they buy bonds, mainly on the short end of the curve, and they also buy mortgage-backed securities. And this obviously artificially suppresses rates and provides ample liquidity to the market, but it doesn't really help the average everyday American. It may help people who own assets, right, like US equities or risk assets, but if you look at the grand scheme of things, very, very few, I would say, I think the statistic is the top 5% of Americans own about 90% of all the assets, right? So that includes equities, homes, real estate, And when you inflate the money supply, that also causes asset price inflation. And for anybody who owned a home, anybody who owned, multifamily real estate or equities, you've probably done really well. But the people who lost their jobs due to the '08 financial crisis, that didn't work in banking or tech, just the average middle-class worker, they were obliterated and wiped out, right? And their means to acquire these assets got harder and harder and harder. So, I don't know. Again, that's my opinion. I think we should have let the banks fail in 2008. We probably would have gone into a 5 to 6 year absolutely brutal economic environment. But I think over the long term, we would have built a more sustainable economy as opposed to an economy solely predicated off of very, very low rates. But could be wrong. Yeah, NMB 045, kind of a cool shoe repair store there, isn't it? You never really see those anymore. Hey, John is here. Welcome, John. Michael Joseph says idiot lenders, credit default swaps, and mortgage-backed securities were ultra leveraged. Yep, you're right. So this is an interesting look at the St. Patrick's Cathedral here for everybody. We usually are looking at this building from the 5th Avenue side, but now we are on the other side here at Madison Avenue, where we will cross over to Park Avenue here in just a minute. Hey, Austin City Limits says, Tom, did you notice the 2 and 10 year inversion was up? Yeah, I saw that. I did. Let me see. Hey, Pineapple Water is here. It says, hey, Tom, what we did with the airlines during COVID was bad also. We did the same with autos. Yeah, so you're right. So Pineapple Water makes a very good point as well. Let's quickly cross over to Park Avenue. I want to show you guys one of my favorite buildings in the entire city. It's called the Seagram Building. So Pineapple Water made a very thought-provoking comment. And what he said is, we did something very similar with the airlines. So for those of you who are not familiar, as we walk past the New York Palace here, and I think it's a relevant topic because it also goes into another thing I wanted to talk about today, which is share buybacks. Now, the airlines, obviously nobody could have predicted the pandemic. I get it. But the airlines essentially had to be bailed out. This go about it. But a lot of politicians, both on the right and the left, by the way, and I think rightfully so, were very, very upset with the fact that the airlines needed a bailout because before that, or leading up to COVID, they went on a binge of share repurchase programs. And for those of you who don't know what that is, corporations oftentimes will use money to purchase their own stock, right? Oftentimes this will help increase the earnings per share, right? Because you're reducing the overall availability of shares on the market, thus increasing the earnings per share. And this helps corporates and corporations, mainly at the C level, reach their, targets, and they get crazy buku money in stock options. So the politicians on both the right and the left were like, look, you should have set aside some money for a rainy day instead of going on these massive share repurchase program binges, right? Repurchasing your own stock. And I think that was the last, I should say, nail in the coffin. Oh, wow, look at this shot. This is really nice. You guys could see all the way to the MetLife building. Beautiful Grand Central Station. This is a great shot down Park Avenue. But I think this was the last nail in the coffin for Congress to act to tax share buybacks. And it's crazy because we called this as a group about a year ago. And a lot of the times, for those of you who don't know, we're passing Blackstone right now. There's a couple of key ways that corporations can return value to their shareholders, right? I think the most common way that everybody knows, as we're looking at the beautiful 432 Park Avenue building, is traditional dividends. But dividends are not very tax effective, right? You have to pay taxes on dividends. So a way for corporations to return value to shareholders is also by taking money from the balance sheet and just buying common stock, because that'll push up the share price and reduce and also increase the EPS, or earnings per share. And that's sort of a loophole where you can get around paying taxes because it is not a taxable event. But big breaking news here. Oh wow, look at this beautiful dog. 10 out of 10 on the dog. So starting December 31st, okay? Any share buybacks or any share repurchase programs after December 31 will be subject to a 1% excise tax. And there was actually some data coming out of Goldman Sachs where they said that there's been a huge pull forward in share repurchase programs, probably because they want to skate past the cutoff level for that 1% excise tax. So anytime a corporation launches a share repurchase program in 2023, it will be subject to a 1% excise tax. And I think that was the main reason. I think that was the last straw. What Pineapple Water said is, a lot of these companies during COVID needed to be bailed out, but the politicians were like, look, you should have had some money set aside for a rainy day fund. Instead, you spent it on share buybacks. So anyway, this is my favorite building, the Seagram building here in New York. Hey, Ian is here. This is Tom. When we go above the 200-day moving average and everybody is talking about a new bull market, smash the button on puts, says Ian. Yeah, I keep to the 200-day moving average in, that's usually, the reason why I use the 200-day is because one of the greatest traders of all time, Paul Tudor Jones, uses it. So usually when the major equity indices can get back above the 200-day, usually new bull markets tend to start off of that. Hey, Julia M is here. Says, hey, Tom and fam. Sorry late to the party. Julia M, good to see you. Seems like you're right on time. I like how they do this every year outside of the Seagram building. They put all of these pine trees in the fountains. And they're real, by the way. They smell great. Smell really, really good. Sabrina Fair, good to see you. Michael Joseph says, this is Joe Biden's plan for inflation to tax buybacks. Vinny says, Tom, collateralized fund obligation, CFO or the new CDOs, whereby involving the securitization, private equity fund or hedge fund assets. Yeah, that sounds like a big toxic mess. Aaron Fraser says, Think and Grow Rich is another great book as well. Fun Feed says BlackRock or Blackstone. This is Blackstone. Over here is the BlackRock global headquarters. Also, did anybody see the article that I retweeted about ESG? So a lot of these big institutional players are actually closing down their ESG funds for lack of demand. And I think you guys know my take on ESG. Blues Writer says, Tom, when the score ends up 0-0, is it really worth going to the match? Yep. Speaking of 0-0, Blues Writer, tomorrow Team USA plays Iran, 2 p.m. Hopefully you guys will be out there supporting. But team, if you are enjoying the live stream so far tonight, feel free to hit the like button and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. We'd love to have you guys along for the ride. This smells fantastic here. I wish there was Walks on Wall Street smell-o-vision, but unfortunately there's not. But it smells absolutely amazing outside of the Seagram building. Also, if you like the specific topics we talk about, right? Financial history, financial forecasting, the stock market in general. If you scan the QR code on your screen and punch in your email, we do write a free investing newsletter where we write about the US equity markets, emerging markets, fixed income, and real estate. Please join us over there. Punch in your email, it's completely free, and we will see you on the other side. You will receive it for free. Yeah, Tanya's beautiful pines, they're fantastic. I like how they sort of made it like a pyramid, you notice that? So they have the smaller trees here going all the way up to, those are probably 14-foot trees, pretty big. Hey, Ben Robinson, this is Evening Tom. Hope you had a great weekend. Thank you so much. Hope you had a good one too. I had a fantastic weekend myself. All right, everybody, we are going to head this way, and maybe we'll take a quick walk around Grand Central Station just so I can get out of the cold. This is cold. Donald is here, says, I'm betting Iran will beat Team USA. They've got great strikers. You know, it's very possible that Iran could pull off the win. It's very, very possible. Now, obviously, as an American, I want Team USA to win. But, look, we need a win, right? Even if we tie, we don't move on. You got to win a game in the group stage to move on. So, look, if we want to make it to the knockout round, we got to bang in some goals tomorrow, and we got to win. We got to do it. So 2 p.m. Eastern, I'll be hopefully watching it. If not, I'll be in and out, maybe on Twitter, watching the highlights. Edward Adams is with 432 Park Avenue. For the unit prices, too many problems. Yeah, it's crazy. Give you one more look at Blackstone here. But for all of those who are just joining, the first half of the stream we talked about Fed President John Williams and sort of what he said today at the Economic Club of New York. We talked about how he's probably forecasting that in order for the Fed to even think about pivoting, he wants to see the unemployment rate get anywhere from 4.5% to 5%. He expects that to happen by next year. So we pretty much have our answer, right? We'll probably have interest rates staying elevated well into 2023, which could cause some increased volatility here. Then we quickly talked about China, right? And I gave a quick example, just sort of we have to be aware that bull markets really tend to start on pessimism. Now, I'm not calling a bottom in the Chinese market. I don't call tops or I don't call bottoms, but if we think about, have you guys ever heard me... Have you guys ever heard me talk about something called a pain trade? A pain trade. Now, if you were to look at the Chinese markets, where do you think the pain trade is? Do you think it's to the downside, or do you think it is to the upside? Now, I'll sort of let you guys answer that on your own, but we sort of talked about some similarities, maybe not in the appropriate context, but in the context of fear as it relates to the Tiananmen Square protests of 1989 that ran from August 15th to June 4th of 1989. And then during all of that fear, during all of that horrible, horrible bloodshed in China, 4 years after the event, pretty much marks the bottom of the Hang Seng Index, and we go on to rally almost 400%. or about 378% to be precise. And who brought this to our attention was Thomas Hayes. Please check out his Twitter handle. He gives great content, so I wanted to give him a quick shout out there. Hey, Daryl is here. This is Tom. Hello from Chicago, Illinois. Daryl, God bless, my friend. Hopefully you had a good, long Thanksgiving weekend. We are now overlooking our very famous Cause statue here. Do you see it all the way over there? Hey, retired in Florida says, hello, Tom. If you had the political clout and financial resources, how would you assist the chronically homeless, affecting New York cities and most cities, affecting New York City and most major cities? Yeah, I actually don't think money is the answer, right? Because generally speaking, right, if we're just being very blunt, the United States has the resources. Okay, if money was the answer to the homeless crisis, it would be solved. I mean, money is ample. Money is unlimited, right? What isn't unlimited, I think, is just basic core competencies. And number one, if you look, now I don't have the exact data, but this is just from my personal sort of ground floor seeing it in New York specifically. Now, I'm not going to say all, but a vast majority of the homeless that I see on the streets of New York, unfortunately, and it's heartbreaking, they probably have some sort of a very severe mental illness where these people, it's just unrealistic to say that they could hold a job or something like that, right? I think that's fair. And look, if you disagree and you think that, you know, maybe I'm being too harsh, I am very sympathetic to that, but that's just what I see. I like to, you know, be very honest about it. So I think you would need to invest billions into essentially mental institutions and provide a place for those people, because a lot of them, not all, it's just impossible to have them assimilate back to society, just from what I'm seeing. And it's heartbreaking, but I think money is not going to solve the issue. You got to build infrastructure to solve it. You could throw money at it all day, but it's not going to do anything. Wow, look at this. So this is coming along nicely here, everybody. This is the brand new JP Morgan Chase building. This is going to be home of Jamie Dimon. I cannot wait until it is finished. Now, we could probably go back into our previous live streams and do a little bit of a time lapse of this building. It's coming along quite nicely. And again, we have the One Vanderbilt building and the MetLife building all in one. Another thing I wanted to bring your attention to, everybody, is look at the action we had today in the VIX. We actually had a pretty big move in the VIX. And this, I'm going to call it for now, bear market rally that we've seen across the board in the major equity indices, such as the NASDAQ, or most specifically, I should say, the Dow Jones Industrial Average, or the Dow 30 and the S&P. You sort of see how these market mechanics play out, right? We've had the VIX collapse, we've had the dollar become weaker, and we saw that 10-year US Treasury yield come down, and that has fueled this stock market rally as it relates to those major equity indices. But did you guys notice the mechanics of the market today as it relates to, number one, the VIX, right? I think the VIX was up, had a nice pop, about 8% today. Then we also had a little bit of a rally in the dollar. The Dixie, ticker symbol DXY, which is an indice that tracks the relative strength of the US dollar versus a basket of currencies, was up, and the 10-year US Treasury yield was actually up. So it seems as if in the environment we're in, right, generally speaking, I'll give you one more shot of the front of the JP Morgan Chase here. They did a really, really good job with the Christmas decorations. Really, really nice. It seems as if the environment we're in, when we follow these mechanics, generally right now, dollar up, 10-year US Treasury up, VIX up, equities down. It seems to be, and again, generally, that seems to be the mechanics here. So if you look at those key levels, I mean, the VIX has absolutely collapsed. I think we've actually almost gotten down into the teens. I think the VIX is what now? 22 or 23. So if we can have a big pop in this VIX, if we can have the dollar wrecking ball come back and maybe go back up to maybe 110, and we could have a little bit of a sell-off in the debt market, so we have yields go up, I think we're going to continue to see equity indices fall under pressure here, but we'll see. Hey, Ryan Beck says at least there is some correlation between the VIX and equities versus the disconnect as of late. Says Ryan. Good to see you, Ryan. Hey, Marcy says, okay, guys, I have to go. Houston is under boil water notice since yesterday, so many food places aren't open. Whoa. Well, Marcy, please be well, my friend, and keep us updated. Please come back, maybe join the chat tomorrow or the next day. Keep us updated on that. Boil water advisory, that's not good. Please be well. Hey, Mark Francis is here. This is Dallas, Texas has a test project where they have built these tiny homes for the homeless, and they give them counseling and support. Yeah, I think more than anything, it's a mental health crisis. It's really sad. And being blunt, I don't have all the answers. I don't think anybody does. If anybody had all the answers, I think the problem would be solved, right? All right, we're crossing Bobby Van's very good steakhouse. But let's actually go inside Grand Central Station. Spider Blaze says, are you going to Times Square? To be honest, I'm not sure if I have the mental fortitude for that tonight. It was a long, long day. Hey, Bit of Wander is here. Says, hey, good to see you, Bit of Wander. Bruce Wayne says it's also a drug crisis. Yeah, I don't want to make the whole stream about drugs and homelessness. I've noticed a correlation between bots and those type of conversations. But I will say this: where I'm most concerned, and I think I've said this before on the stream, my biggest concern in America right now is all the fentanyl, and that should be the U.S. government's top priority: is getting all of this fentanyl off the streets. And it's coming through the southern border, and building a wall is not going to solve it, because a little ball of fentanyl that could fit in the palm of my hand could quite literally kill every American in the country. So you could toss that right over the wall. You got to address the root problem, and I don't want to set off a political spectacle in the chat, so we'll just move on. Hey, Twitch ASMR, this is Tom. How did your presentation go? It actually went really good. Went a little bit better than I expected. However, I will give you guys some context. A lot of the times I like to give, I guess, some precursors to what I'm seeing on the ground floor in the business world. Now, I'm noticing my sales cycles are elongating, and it's for a couple of reasons, but hold that thought. This is the MetLife building. Look at how beautiful the Christmas wreath is here, as well as the Christmas tree. I think they did a great job. All right, let's head inside. I gotta warm up a little bit, I'm freezing. Hey, US Soccer Talk says, hey Tom, are you ready for tomorrow? I am ready, man. I'm excited. I'm ready. I'm ready to go. Throw me in there. I'll play. I probably won't do too good, but throw me in the game. Now, I'm seeing on the ground floor that a lot of businesses are hesitant to taking on new projects right now. And the feedback that I'm hearing as to why is not necessarily because of the cost of the software, the cost of the hardware. It's the broader cost of potentially having to bring on more employees to do the implementation. Does that make sense? And when we think back to what Fed President John Williams said today, that one of the main drivers of inflation is wage pressures, that is very true, especially in skilled labor or tech. Employees are commanding very, very high salaries. So where I'm seeing a lot of resistance is customers really, really wanting to vet just how time consuming and I would say human capital intensive these projects are going to be, because they are under very, very tight lock and key as it relates to budgets for next year to bring on new employees. And that has been holding up a lot of deals. And I get it. I get it. All right, everybody, we are now in the beautiful Grand Central Terminal. Let's take a look at how amazing it is in here. Yeah, Andre Almar makes a good point. Says, Tom, employees are demanding higher salaries also because the cost of living has skyrocketed as well. Yeah, and that is what you call the wage price spiral, right? So employees, and this is exactly what the Fed was worried about. Employees, right, if you think about the cost of living, and we've been talking about the CPI specifically as it relates to shelter costs, right? And shelter costs makes up about 33% of the CPI. And that is the one category of the CPI or the inflation number that did not go down. It actually went up. So, to Andre Almore's point, obviously, employees are going to be demanding and commanding higher salaries because the cost of living is going up. And thus we have the wage price spiral. So it's a good point. Hey, Twitch ASMR is a very classy place. Yeah, US Soccer Talks, it's nice and quiet here tonight. You know, I noticed the city was kind of empty today, especially in Midtown. I think everybody has the Thanksgiving hangover. Nobody wants to come to work on Monday. But if I had to bet, I think tomorrow, Tuesday, is probably going to be pretty packed in the city. Hey, Donald says, Tom, New Zealand is facing wage inflation right now. Unemployment rate is at record levels. Michael Joseph says the problem with inflation is that it's really shrinkflation. I bought a bag of chips earlier and they now give you half of what was in there. Yeah, shrinkflation is very, very real. Very, very real. I've noticed that too. You know where shrinkflation is actually very, very present? And I was reading an article about this. In a lot of the, I'm blanking on the name. I'll just say toiletries, right? Toothpaste, things like that. You think about all the money these companies can save if they could just, you know, scrape and scam you off of, you know, an ounce of what it actually used to be. It's a lot. All right, here's a shot from the other angle. Hey, Dan is here. What's up, Dan? Good to see you.
Your attention, please. All luggage and parcels must be attended.
Wow, Cynthia Beal says, I noticed more people today. The smell of pot in the Staten Island ferry and on the streets of Manhattan. I do not smell much on Staten Island, rarely. Wow, interesting. Yeah, Billy Johnson says lots of hockey jerseys. Is there a game at Madison Square Garden tonight? Does anybody know? NMB 045. This is my favorite chocolate chip cookies. Now come in a pack of 8x3. Or they did, now it's 6x3. Wow. Oh, the Rangers did play earlier. Very interesting. Mark Francis. You know, I saw a comment. The chat's scrolling by a little fast, but that's a good point about the cyclicality of some major cities. Now, we actually talked about the 2008 financial crisis quite a bit. And if you look at the different segments of the market, or I should say sectors that went down in price more than others, it was cities like Miami, Florida, Tampa, Florida, Houston, Texas, Las Vegas, Nevada got hammered during the 08 financial crisis. And these places tend to have a very, very big meteoric rise during very, very good times and a very, very big downfall during bad times, right? And then some markets are more sustainable and stable over time, right? And sort of the theory there is that when things are doing well, when you're making a lot of money, people buy second and third homes in places that are very desirable to be all the time, right? So places like Tampa, Florida, maybe Las Vegas, Nevada, Miami, Florida, and the like, right? So it's a very, very good point at the sort of cyclicality of different, I would say, sectors of the market as opposed to others. Good point. Whoa, look at this. This is Wine and Food City Winery and live music. I haven't seen this before. I think they just put this up. Hey, Sherry Rodrigo. Good to see you. This is Hey Tom. What's up, Sherry? Thank you for joining us tonight. Brick says, I feel the same way about the smell of pot. Smelled better in the 70s and 80s. Now it stinks. Interesting. Hey, Big Pix just got back from Vegas. I don't think I could ever live there, man. I mean, I've been there many, many times, not to gamble, but for business. I really, really don't think I could live there. It's just, it's a desert. It's out in the middle of nowhere. And I'd much rather be near the coast, right, near the water, in my view. Hey, Sunset Blue says, I live in Tampa, Florida. Tampa's beautiful. Beautiful, beautiful place. I will actually be back down in Southern Florida next week, which I am very, very much looking forward to. I will be back down in Miami, Florida. Ali Star says, what about Palm Springs? Well, Palm Beach specifically is very, I would say, a high rent district. Now, here's what I will say about Miami. And again, keep in mind that I may have a bias skew because I do live there, right? So anytime I may have a bias, I think it's appropriate to say that. So just keep that in mind before I'm about to say this. I think over the course of the past 5 years, Miami, Florida has built a more sustainable infrastructure as it relates to jobs. Because one of the biggest, I would say, just for lack of a better term, criticisms of Florida in general, specifically Miami, as you compare it to a city like New York, and I know you shouldn't compare it, it is the lack of high-paying jobs. But I think ever since even leading up to the pandemic, and the pandemic itself with remote working and just more favorable business environment down in Southern Florida, you're seeing more sustainable, high-paying jobs and concrete businesses deciding to open up shop down there. Now, yeah, you have a lot of the frothiness with the crazies and the corny, like, cryptocurrency, altcoin people that, you know, are sort of like one-hit wonders, but there are a lot of substantial and real businesses. And I would know because I work in the tech industry, and wow. I think that may be the subway we're in. And it is a lot more sustainable and infrastructure is more developed than years past. So I think it's improving. Sunset Blue says the traffic in Tampa sucks. You know what, Sunset Blue? You know what really caught my attention? That I was very, very surprised about when I first went to Miami. I can honestly say that I think the traffic is worse in Miami than it is in New York. If you guys could even believe that. It's brutal. It is absolutely brutal, the traffic there. Brutal. Hey, Bruno is here. Says, hey, what's up, bro? I'm from Brazil. Arrived in New York in February. Hey, well, hopefully you enjoy your stay. And welcome to New York. Hopefully you have a fantastic time. Now, I think Brazil played today, right, in the World Cup? I think they won. I think they won their game 1-0. One of their goals was called back offsides, though, right? Good game. Good game, though. Now, here's the good news. So we should be back in Miami next week. But I do have to come back for the holiday, right? Christmas, I got to spend it here in New York with my family. But as we approach the winter months in Miami, usually we see some dolphins jumping around in the live stream. So hopefully we'll be able to see that. Ed Podcast says, I could not handle the heat. Yeah, I mean, again, it's not for everybody, right? Now, for me, I tend to prefer the heat. I like it hot all year round. I don't think I would ever leave New York City if it was hot all year round. But I'm just not a cold guy. I can't stand the cold. I love it hot. Okay, everybody, now we are approaching the Stephen Schwarzman building, the New York Public Library. I actually had a chance to do some studying in this building today. It was absolutely beautiful. I would highly, highly advise anybody to make this a must-go for your stop, for your trip to New York City. Outer Havens is even the sticky hot. Even the sticky hot, yeah. I don't know, I think it's mainly because I like the ocean, right? I love spending time at the beach and the water. I just can't stand it cold, man. Look, everybody's different. Everybody's different. Cowboys, just come to Texas in August if you like it hot. Yeah, but I really like being on the water, though. I like being, you know, that's one of the reasons why I chose Miami over Denver, Colorado. Because Denver is a beautiful, beautiful city. And I really, really like Denver. And I think they're doing some great things as it relates to building tech infrastructure there. But I just couldn't do the no water. I couldn't do it. All right, team, if you look straight ahead, this building right here is the Salesforce Tower. I'm sure you've seen it a million times on the channel, but tomorrow is Tuesday, and that means Mark Benioff's company is up on the earnings block to report their quarterly earnings. So ticker symbol CRM will be reporting tomorrow. And I think one of the things that I'm most curious about as it relates to Salesforce earnings is to see how the integration is going and how the business and sales growth is going over at Slack. Okay, so we know that Salesforce made a very strategic acquisition of Slack that was formerly publicly traded under the ticker symbol WORK. Now, I'm very concerned about Slack because in the software business, I like to define it and break it down into two very broad categories, right? And I know there's some in between, but for the sake of time, we'll just keep it to two very, very distinct categories. And that is a must-have piece of software and a nice-to-have. And I think Slack is a very, very good collaborative tool, but I think in an economic environment when corporations are looking to cut capital expenditures, you know what I just noticed? I just noticed that Bryant Park was spelt, well, for the sake of the Winter Village, they put 4 R's on Bryant. Just noticed that. But why would I pay for Slack if I get Microsoft Teams free with my MS365 licenses, right? I think organizations, and I'll just give you some context in my company. I'd love to know what you guys think, what you're doing at your current companies. But in my old company, we used to have Microsoft Teams, we had Slack, and we had one other one. I forget what it was, which nobody used. But the point was we were spending so much money on nonsense software, right? When we could have easily just consolidated and just used Teams because we were a Microsoft shop. So I don't know, do you guys see at your particular company that you work for, or maybe your small business, are you looking to cut unneeded software for the next fiscal year? Let me know in the comments. So Ryan Beck says, Tom, it's silly. We use G Suite for most collaboration tools, Slack, and then we use Blue Jeans for teleconferencing. Oh my God, dude, you almost gave me a heart attack because I have a new least favorite teleconferencing platform, and it is Blue Jeans. As you guys know, it used to be Cisco WebEx. That is the most horrible UI I've ever seen in my life. But I think Blue Jeans, which I actually think is a Verizon product, I think Verizon bought the company, that is by far the worst, by far. Zabas' Teams is not consistent. This Monster says, Tom, use Teams at my firm. We just don't see the willingness to pay extra for Slack. Yeah, like that's exactly what I'm trying to say. I'm very nervous now about this report because look, Slack is a very, very good piece of software, but not in an environment when if we've been through Q3 earnings, right? We've essentially covered a deep dive in almost every single company, and the number one thing that they're looking to do is cut costs, right? Cut capital expenditures. I mean, Mark Zuckerberg's company, Meta, got flamed on the earnings report when they said that they were actually going to expand capital expenditures from next year, fiscal year, I should say. They got flamed. Stock got clocked. So, yeah, I mean, is there really a need to pay for Slack when you just get it for free? Rothschild or Richchild 9 says we use Teams as well. Eric says, Tom, I like Slack from a software dev or for software dev. This is Eric. Eric, quick question for you, out of curiosity here. Do you utilize Atlassian? And if so, what do you think about, I think this guy almost got hit. Atlassian's obviously Jira and Confluence products. Jared Vincent says, Tom, Slack is good for internal tech teams, and it doesn't off much for tech sales. Very good point there. I'm trying to read the comments. Mark Francis says, I think I hate Teams because I hate my job, period. Andre says, Slack has integrations with a bunch of software, Teams doesn't. It's a good point. Joseph Hardaway says, never used Teams before, but I use Slack and it reminds me for the reminders not to talk. Reminders not to talk I use for being productive. Copy that. Yeah, we'll see. I think it's going to be interesting how they report. Ryan Beck says, yes, I think Verizon acquired Blue Jeans early in 2020. Duda says, my last company, we moved from Slack to Teams because it came free, as Slack charged us about $120K for renewal. Wow. It did take a few months to migrate our data and incur professional service costs. M. Royal says, Tom, as an IT pro, I usually recommend software consolidation first, especially when it comes to communication, either all Slack, all Teams, or all Skype, or whichever. You just have to go with one, says M. Royal. It's a very good, I think you may be right, because I can tell you from experience, and again, this is only my personal experience, it was like my head was spinning around. Every time I would get pinged on Slack, then pinged on Teams, and then, thrown a million meeting makers on Cisco WebEx. It just got too much. All right, check out this beautiful view we have of the Empire State Building, right outside of the Salesforce Tower. Greg says we use SharePoint as well as Teams. Julia M says, I think Slack still has high brand recognition and loyalty. It's definitely a premium product, right? Slack is definitely a premium product. And it seems as if a lot of people also want to work there. Now, if you go on LinkedIn, something like that, look at all of the job openings for Slack. And every single one of the openings has like 100 plus applicants, like 200 plus applicants. It's very similar to the behavior that you see at the major investment banks, where, one, sales and trading position has like 500 applicants. It's really kind of bizarre. Hey, hello, mate. 2008 says, hey, Tom. Hello, New York City. Good to see you. Always a pleasure to have you here. Peter says, Tom, in my company, everything was moved to Microsoft, and Teams was great with Outlook and SharePoint. Better integration, never missed Slack after moving to Teams. Very interesting. I mean, look, it's going to be, I guess we'll see tomorrow, right? How Salesforce reports. Now, I don't even know. I think they'll probably release some data there, hopefully. Mark Francis says, I quit using Twitter. Yeah, at the beginning of the live stream, we briefly talked about, now Elon Musk, he came out here. I'll quickly show you the Steinway and Sons store. He came out and made a tweet that Apple is allegedly going to remove Twitter from the App Store. Maybe. But I'm not sure how true that is. Right? I guess if it's coming from Elon Musk, it must be true. Right? He is the owner of the company. But supposedly Apple did not give any reason for that. Now, we had a couple people in the chat say that it's because Elon Musk is really going hard in the paint here as it relates to the 30% take that Apple will charge. But I guess we'll just have to see. Dude, says Teams integrates with all apps that Slack integrates with, in my experience, as I've used both. yeah, I don't know. Teams gets the job done for me, especially as it relates to giving demos and presentations and things like that. It's always the Cisco WebEx that's the worst. Hold on, I gotta put you guys down for a minute. I gotta zip up my jacket. It is getting freezing here. All right. Hey, Ignacio's here. Says hello, everybody. How are you? Doing very well. We'll just quickly do a brief recap for those of you who are just joining. Now, we had a long conversation about the Hang Seng Index, right, which is the Chinese market. And the reason why we've been talking about that is because of the major protests that are going on right now in China due to the zero COVID policy, right? It's being met with a lot of abrasiveness, I should say. Now, the reason why we're talking about this as it relates to the Hang Seng Index is because last night, while we were doing the stream, let me cross here. We're passing my old office. The Hang Seng Index was down about 4%. All right, so we were down big in China trading, but if you notice, we rallied all the way back and closed at the dead high of the day. Even though we closed down about 1.5%, we closed at the dead high of the day. And this really brings me back to the very famous saying on Wall Street that bull markets are born on pessimism, they grow on skepticism, and they die on euphoria. And in China, not only have these protests broke out, but we've been dealing with this zero COVID nonsense for quite some time. Also with the, I wouldn't say changes in the CCP, it's more of the same, right? And that has been getting investors very, very scared. Now, I like to present both sides, both a bull thesis and a bear thesis. So we were talking about a specific tweet that I found on Twitter. I think Twitter is a great resource by Thomas Hayes. And if you want to go check it out, I would very, very highly recommend you check it out. So if you go look at my Twitter page, if you follow @WalksWallStreet, you'll see a comparison, right? And I know that these two situations are different, but think about it in the perspective of market sentiment. So let's think about the 1989 Tiananmen Square protests and the major massacre that happened from April 15th of 1989 and ended June 4th of 1989. Now, you would think during that time and after, all of that hardship, all of the atrocities that we witnessed there, that the market performance would not do well. Well, it was actually the exact opposite. That pretty much marked the bottom of the Hang Seng Index. And 4 years after the event, went on to rally almost 400%. This is the Fox News building, by the way, News Corporation building. The exact amount was about a 378% rally. Now, this is not to say that these protests are the same as the Tiananmen Square protests. It's not what we're trying to do. What we're trying to say is gauging sentiment usually markets bottom off of the most egregious and aggressive fear. So there is a possibility here where we could have a little bit of a pain trade to the upside as opposed to the downside. So this is the Fox News Christmas tree. Automatic 2-point reduction though for it being fake. It's a beautiful tree, but it's a fake tree. So at the end of the day, we have to take off 2 points. Hey Abdullah, good to see you. Sparks Carnival says, I'm surprised we didn't talk about BlockFi's bankruptcy filing. Yeah, so a lot of the, obviously that is going to be a big fallout from the FTX debacle. But I think a lot of that is already played out and the media has really been hammering on it. So I've actually muted all the keywords as it relates to FTX. Because I just don't, in my personal opinion, I don't think I'm going to gain any value out of following this FTX story anymore because I don't really have anything to do with it. I knew it was a fraud from the beginning, and like many of you did. And I don't really deal with the altcoin space. So. Blue Label says, walks from Wall Street. Does that mean no one can withdraw their money from FTX and BlockFi? What I would say is this. If you had money on there, I would just consider it gone. And I know that sounds depressing and demoralizing, but you're not going to get your money back. It's gone. Usually, if you're very familiar with bankruptcy proceedings, the individuals are the last people, like the very last, to get their money back. If you do get money from some sort of a civil case, you're probably going to get a check in the mail in 10 years for like 70 cents. And I'm not saying that to sound like stuck up and nasty. It's just the reality, right? Yeah. I think anytime you have an exchange, right? A cryptocurrency exchange that also has its own token, right? That's a big red flag because they're essentially soliciting a security, right? They just don't call it a security, to raise money to fund their operations. And if confidence is lost in that token, then the whole thing comes undone. So that is why, and I think I've said this before on the, I tend to be very, very skeptical of alternative coins. All right, so here we are outside of Radio City Music Hall. I mean, I feel really bad for all the people that lost money in this. And I think there needs to be a punishment for Sam Bankman-Fried. I think he blatantly defrauded a lot of people. And hopefully justice will be served and he'll serve some time. But, oh, I got to plug in the battery. I apologize. Give me 2 seconds. Billy says he better serve time. They had Madoff out in cuffs within hours. That's a really good point. Now, I think the reason why this is a little bit different this time is because I think he is in, the Bahamas? And maybe that has a little bit of jurisdiction, like a little bit of difference in jurisdiction there. I don't know, but you're 100% right, Billy. You're right. Dr. Long is yes, I am. Hey, Emilio J, good to see you. Oh man. Hey, Dan says I'm reading every Buffett partnership letters dated back to 1955. I think they have a book. of the Buffett letters. Those are really good. This is the best halal food place here in the city. Now, really quick, just to... Oh, look at this. I think the drain came up, and it's actually draining the fountain right now. So Friday is going to be a big day. That is the first Friday of the month. So the first Friday of every single month, we hear from the non-farm payrolls. And as I said at the beginning of the live stream, I'm not so much as concerned with the non-farm payroll number as I am with the unemployment rate. Because as we heard from Fed President John Williams today, there's going to be no sign of a pivot until the unemployment rate hits about 4.5% to 5%. And right now we are at 3.7%. So I think we are a very, very long way off from any form of pivot or really any type of dovish activity as it relates to monetary policy, because there's a very good possibility that we may have another consecutive reading of 3.7% as it relates to the unemployment rate. And that means we'll probably have interest rates at least being held near the 5% level as it relates to the Fed funds rate all the way until 2024. So I think we need to pay attention to that on Friday. That's coming up. Big Picks is the Buffett line at the Cosmopolitan Las Vegas was 2 hours. Sleazy Easy is here. This is a few more 50 basis point rate hikes. We're almost reaching 2 hours here. I gotta head back down to Penn Station. I lost track of time, as we usually do. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you are new. As we move through the next month on the stream, this is what I would generally like to do. Now, I told you guys this earlier, but we've been really getting a good grasp on how to use the bond market as a leading indicator to predict, or hopefully to predict, GDP growth, to predict corporate earnings, and lastly, the trajectory of the stock market. But we've really only been talking about the treasury market, right? And in layman's terms, the treasury market, its purpose is for the government to issue bonds. This is Del Frisco's, very good steakhouse. For the government to issue bonds in exchange for raising money to finance government spending, okay? So there's another side of the bond market called the corporate bond market, where corporations do much of the same thing. They issue bonds at a yield to finance the expansion of their operations. And there's a lot of interesting things that we can take here from the corporate bond market as it relates to leading indicators. So over the course of the next couple streams, we are going to be talking about how corporate bonds are priced via a spread over the 10-year US Treasury yield, or the benchmark. We are also going to be looking at a basket of indices, or bond indices, corporate bond indices, from AAA all the way down to junk bonds, the junkiest to the junk, CCC. and how we can use those spreads to predict market movements. And this is why I always say that I believe many retail traders and retail investors always put the cart before the horse. They're always talking about what's the next best stock to buy, top 5 stocks to buy. It's all nonsense, okay? You need to understand how money is priced, because businesses borrow money at rates to finance or fund operations to grow those businesses. And as we tie it all together, one of the things that we do is build a discounted cash flow model based upon a discount rate, right? So the bond market is very, very critical and very important to use as a leading indicator to try to predict the trajectory of GDP growth and the trajectory of stock markets or the S&P 500. So I think we've pretty much covered the treasury market ad nauseum. So I think it's appropriate as we move forward in these live streams to really, really hammer down on the nitty-gritty of the corporate debt market. And I think it's so important that I will also be posting standalone videos on it, as well as writing a piece about it in the newsletter. So if you want to stay up to date on that, if you scan the QR code on your screen and punch in your email, you will be signed up for free to receive our newsletter, where we talk about the US equity markets, emerging markets, bond markets, all that good stuff. We will be getting on, check this out. Let's watch these guys go by. We will be getting on a regular schedule with publishing the newsletter now that responsibilities at work are easing up. So please follow us over there. Quick rating on the horses here, NYPD horses. Beautiful creatures. To see these things trotting through Manhattan like that, that's awesome. I think 10 out of 10. Does anybody know the exact name? I think it's called the mounted unit, right? The NYPD mounted unit. 10? Yeah, I'm getting a lot of 10s. War Walker's like 20 out of 10. I agree. Yeah, Vivian, they're beautiful, right? Now, I'm not sure if it does it justice on the live stream, but when you stand as close as I was standing to those horses, those things are massive, and you see all of their muscle detail. I mean, if that thing ever kicked you in the face, your face would probably be in pieces. I mean, those are just tremendously powerful creatures. Unreal. Fairway says horses are always a 10. That's appropriate. I can get behind that. Hey, Nicole is joining us. Good to see you, Nicole. Hopefully you had a fantastic Thanksgiving. Mike Cease is the exact opposite of the Central Park horses. Yeah, it's almost as like they're on a different diet, right? They just look, I don't know, they just look different. They look like they're on a completely different diet. They look like beasts. Hey, Abdullah, what's up? Good to see you. Yeah, Harry Connor says it's good for the crowd control. You know, speaking of crowd control, we are moving into December, if you could believe that, the last month of the year. Crazy. Which means not too far along, right down here at 42nd Street, they are going to be dropping the ball, the Times Square New Year's Eve ball. And we're going to be ringing in 2023, if that's even possible. And we'll see a ton of those NYPD mounted units out there.